Imagine waking up one morning, checking your phone, and your entire crypto portfolio is down 90%. That's the reality for a lot of people who went all in on a single coin and rode the hype train straight down. Look, I get it. Crypto is exciting. You hear stories of people turning a few $1,000s into millions overnight, and you want a piece of that action. But the truth is, crypto is known for its volatility. Prices can swing wildly in both directions, and if you're not careful, you could get burned. That's why in this video, I'm going to show you how to protect yourself from the volatile nature of crypto by building a diversified portfolio. Diversification is your secret weapon for mitigating risk and protecting your hard-earned money. So if you're ready to master crypto diversification and start investing like a pro, buckle up, smash that like button, and let's get started. Before we jump into building your crypto portfolio, let's talk about why diversification is crucial. Diversifying spreads your risk across different assets. Instead of putting all your eggs in one basket, you're allocating capital across multiple assets. If one investment fails, others can balance it out. The same principle applies to crypto. Spread your investments to hedge your bets. If one coin goes down, others might hold value. Regulations and market sentiment can shift quickly. A well-diversified portfolio is non-negotiable. Now that you understand the importance of diversification, let's explore the vast and ever-evolving landscape of cryptocurrencies. Because to build a truly diversified portfolio, you need to understand the different types of cryptocurrencies out there and their unique characteristics. First, we have Bitcoin and Ethereum, the two heavyweights of the crypto world. These are considered the more established cryptocurrencies with the largest market capitalizations. Bitcoin, often referred to as digital gold, is seen as a store of value, while Ethereum, with its smart contract functionality, powers a vast ecosystem of decentralized applications. But the crypto world doesn't stop there. We also have stablecoins, which are pegged to the value of fiat currencies like the US dollar. Then there are DeFi tokens, which power decentralized finance applications, offering innovative ways to lend, borrow, and earn interest on your crypto. As you can see, the crypto landscape is incredibly diverse, offering a wide range of investment opportunities with varying levels of risk and potential rewards. Chapter 3, Building Your Diversified Crypto Portfolio. Now comes the exciting part, building your very own diversified crypto portfolio. Determine your risk tolerance. How much volatility can you handle? Allocate more to established cryptocurrencies like Bitcoin and Ethereum. Balance with higher risk assets like DeFi tokens or NFTs. Rebalance periodically to align with your strategy. Chapter 4, Strategies for Effective Diversification. Now let's dive into some specific strategies you can use to diversify your crypto portfolio like a pro. One popular strategy is dollar cost averaging. This involves investing a fixed amount of money at regular intervals, regardless of the market price. By doing so, you're essentially buying more coins when the price is low and fewer coins when the price is high, averaging out your cost over time. Another effective strategy is to create a diversified basket of cryptocurrencies. This involves investing in a variety of coins across different sectors of the crypto market. Remember, the best diversification strategy for you will depend on your individual circumstances, risk tolerance, and investment goals. Chapter 5, Maximizing Your Crypto Portfolio's Potential. Congratulations, you're well on your way to mastering crypto diversification. But the journey doesn't end there. To truly maximize your portfolio's potential, it's crucial to adopt a long-term perspective. Avoid getting caught up in the hype and FOMO, fear of missing out, that often drives short-term market movements. Instead, focus on identifying promising projects with solid fundamentals and hold on to your investments for the long haul. The crypto market is still in its early stages of development, and the potential for growth is enormous. Stay informed about new trends, regulations, and technological advancements in the crypto space. And lastly, don't be afraid to seek professional guidance from a qualified financial advisor who understands the complexities of the crypto market. So there you have it, guys. That's how you can protect yourself from the volatility of the crypto market by building a diversified portfolio. Remember, diversification is your best friend in the crypto world. It's not about trying to time the market or chase the next big pump and dump. It's about managing risk, protecting your hard-earned money, and positioning yourself for long-term success. Take your time, do your research, and don't be afraid to start small. The most important thing is to take action and start building your diversified crypto portfolio today. Until next time, stay informed, stay invested, and I'll see you in the next video.